Welcome back. This is The Firm. This week, the Andhra Pradesh High Court ordered an interim stay on the $4 billion Sun Pharma-Ranbaxy deal on allegations of insider trading. Now, two Hyderabad-based Ranbaxy shareholders filed the petition alleging two instances of insider trading. That the Ranbaxy share price rose 24% between April 2nd and April 4th on 5 times the daily average volume traded, whereas the deal was announced only on April 6th, indicating extensive trading by people who had prior knowledge about the proposed merger. The second allegation of insider trading refers to the purchase of Ranbaxy shares by Silver Street developers. That's a 100% subsidiary of Sun Pharma. These purchases seemingly took place late last year and also in the first 3 months of 2014, prior to April when the deal was announced. The petition alleges these purchases were made while Silver Street and Sun Pharma were in possession of price-sensitive information as they were actively involved in the merger negotiations. On these grounds, the two Ranbaxy shareholders filed a petition with the AP High Court seeking a SEBI investigation and action and seeking that SEBI, BSE and NSE not give their approval to the merger or the scheme of amalgamation. Thus, the AP High Court has issued notices to all involved and granted a status quo on the scheme of amalgamation till the case is disposed. Is there any substance to these insider trading allegations? And should a deal be blocked on those counts? To answer that, I have with me today Sanjay Butch of Crawford Bailey and Rajat Sethi of SNR. Gentlemen, to both of you, a warm welcome to The Firm. I'd like to start by focusing on the two insider trading allegations first. And the first one is fairly simple. There is really no point of law to talk about. The allegation is that the Ranbaxy stock price ran up in anticipation to this deal. Clearly, people in the market seem to be in the know of what was going on, and hence, there is case for an investigation to be made and to be found out whether any leaks took place and anybody had unpublished price-sensitive information. I think the response to that allegation is simply a SEBI investigation without which we would not know anything about how this came to be. The second question, if I may say so, is the more important question in law here, and which has to do with Silver Street's purchase of Ranbaxy shares. Can that be viewed as insider trading? And to answer that question, I'm going to lay a few situations in front of both of you. The first one being that Sun is able to show through evidence that the purchases took place much before it made any approaches to Ranbaxy. I'm assuming if Sun is able to show that, then Sun is well in the clear. Would that be right?
Yeah, that's fair, because the factual determination will determine the outcome of the investigation. Lot will depend on what is the evidence, the standard of proof which is available to determine whether or not the persons in possession of unpublished price-sensitive information utilize it for making undue gain of securities to the detriment of the retail investors.
I think it would be, as Sanjay said, it would be a matter of evidence. It would be relevant when the discussion started. Obviously, even if the purchase was made at a time when there was a possible transaction, even then Sun may be in the clear. But if, however, the negotiations were advanced and there was reasonable probability of a transaction, then perhaps one has to look at it in a closer fashion.
Okay, assuming that Sun is speaking the truth and saying, look, we did not make any purchases while we were in conversation with Ranbaxy, why are you saying, Rajat, that had they bought the shares even as they were making an approach to Ranbaxy, they would be in the clear?
So not when they were making an approach. When there is a possible transaction, perhaps at that stage one is able to say that they do not have access to any unpublished price-sensitive information because it's only a possible transaction. And I think the determination to be made in these cases would be, when do you cross over from the realm of a possible transaction to a probable transaction? And unfortunately, there is no bright line. It would be a factual determination. You look at when those conversations took place and what the status of those conversations was to be able to answer this question.
Sanjay, would you agree with that? And what if I was to twist the question to ask you this, that Sun would have known that any news of the fact that it's interested in doing a deal with Ranbaxy in itself is price-sensitive information. Until it is not published, it is unpublished price-sensitive information. So if it knew of its own intent to pursue a deal, if it was buying shares while this intent was forming in its own mind, and therefore whether it bought those shares a few days before making the first approach to Ranbaxy, or on the day it made an approach to Ranbaxy, or a few days after that but before Ranbaxy actually decided to do the deal, would it still not mean that Sun had unpublished price-sensitive information regarding its own intentions and therefore bought shares of Ranbaxy, violating the insider trading regulations? Or is that a stretch altogether?
No, that is a stretch altogether, because Silver Street is not really a subsidiary company of Sun Pharma.
Well, the two owners of Silver Street,
it is a limited liability partnership.
Yeah, but the two owners of Silver Street, or the two partners in Silver Street, are 100% subsidiaries of Sun. So I get, in legal language, it may not technically be a 100% subsidiary, but it really is the equivalent of Sun, isn't it?
So there cannot be a direct allegation on on Sun Pharma, because Sun Pharma in its own independent capacity was negotiating the transaction with its
So you're saying Sun can make avail of the defense that what Silver Street decided to do in terms of a transaction is not connected to what we were trying to do with Ranbaxy?
Yes.
You think that would wash, Rajat?
I think that would be more of a defense.
Okay.
And the defense would be along the lines of what the regulations sort of provide for, which is that the persons doing the discussions were different from the persons who were making the trade.
Sure.
Connected and unconnected.
Yeah, these are defenses available in the insider trading regulation, so to speak. So, but let's go back to the point that I made before that, Rajat. What do you think? Can intent, your own self-intent, be equal to unpublished price-sensitive information? Can somebody say, look, Sun, you knew that you were going to, in some way or the other, do a deal with Ranbaxy, and hence your purchase of Ranbaxy shares ahead to that deal amounts to a violation of the insider trading regulations?
A state of mind regarding a possible transaction perhaps may not be enough.
Okay.
It may be a relevant factor when you look at it in the background of other facts. But I think one has to go beyond that and look at a probable transaction. And if once that bright line had been crossed and it had entered into the realm of a probable transaction, and if they entered into a trade at that time, then certainly that would be an issue under the insider trading regulation.
Sun may have another defense there, Rajat. Sun may say, look, we were buying these shares because the first approach to a deal was maybe a takeover. It's only later on, as we were sort of, mulling over things, that some banker came and told us Daiichi wants to exit, and we decided, hey, a merger is a better form. So
the unpublished price-sensitive information in this case would be the transaction with Ranbaxy through a scheme of arrangement. So if there was no contemplation of a scheme of arrangement at the time the shares were purchased, then obviously a charge of insider trading would be hard to sustain.
Okay, you'd agree with
that? Yeah, I'll agree.
Okay, fine. So I think that brings us then to the final question. Given the seriousness of these charges, I understand that the Andhra Pradesh High Court has taken this taken this on board. But to grant a status quo on a deal and punish a deal for what might be possibly the alleged wrongdoing of some individuals, is that a fair thing to do?
But there is no other alternative for the High Court, because High Court will have to give a reasonable amount of opportunity to all the parties to give their say in the matter. And after assessment of the facts on record, replies filed by SEBI, National Stock Exchange, then a view can be taken whether this matter requires to be investigated by SEBI or not.
No, I feel that the High Court has probably gone a bit too far, in the sense that the jurisdiction which SEBI has in relation to investigation of insider trading, that is separate from the jurisdiction to look at a scheme of arrangement. When they receive a draft scheme of arrangement, they have to look at it from the perspective, is it a fair and reasonable scheme? Is the valuation exaggerated?
And Rajat, if I may interrupt you there, that would not even be the responsibility of the Andhra Pradesh High Court, because none of these two companies that are amalgamating are located in Andhra Pradesh. That would be the job of the High Courts in their respective states. So where would the AP High Court get jurisdiction to look at it?
Argued. Yeah, jurisdiction would be one point, although the petitioners would say they are resident in Hyderabad and they are shareholders, so they can approach the High Court in the area where they reside. But I think the point here also, Menika, is that ultimately the High Court has to consider that as far as the transaction itself is concerned, the evaluation of the transaction has to be done by the SEBI and the stock exchanges based on the merits of the scheme and not on the basis whether there was any insider trading. Insider trading is a entirely separate matter.
Yeah, Rajat, but Rajat, what has happened is that under listing agreement there is a requirement to submit a scheme of arrangement for pre-clearance from BSE and NSE, and under listing agreement there is a requirement that the scheme has to be in accordance with the securities laws, and securities laws would include prohibition of insider trading regulations also. So the petitioners may have apprehended that if they have if BSE or NSE were to give a clearance, then there would be nothing left in the matter, and probably that has caused this as a leverage, because currently I think the applications are pending.
So I would say to that the scheme has to be judged on its contents. The scheme is not talking about whether there has or has not been insider trading. And in fact, if the transaction is stopped, then benefits which may accrue to the shareholders, they may be deprived of those benefits.
Like you say, Rajat, at this point in time, it does seem like it's the deal and the shareholders of the two companies that are suffering more than those who may have benefited from insider trading if these allegations are to be proven true. Well, Rajat, Sanjay, thank you very much for joining us on The Firm this week. With that, we're entirely out of time. I'm going to wrap the episode here. Thanks very much for watching. We'll see you next week. When I asked them how the Companies Act 2013 impacts corporate fundraising, here's what they have to say.
Is it an angel or Frankenstein?
I see a lot of process bugs here.
You would almost think the SEBI written this act.
Is it a bird, is it a plane, or is it Superman?
Find out on the Companies Act this weekend on CNBC TV 18.